Today is February 1st. Welcome back to SCN. As you've probably seen here and there, the body positivity movement has been blowing up recently, and we are briefly explaining exactly what that is.
So social media portrays that the perfect body is someone who's skinny and someone who's acne-free and someone who's beautiful and has this gorgeous tan skin. And I don't usually see on social media curvy girls and them being viewed as perfect, because for a really long time when my mom was growing up, the only models out there were skinny girls, and that wasn't really fair at all.
And there is some privilege there. I mean, the same could be said about the other argument, because people like Beyonce and stuff like are thicker in bodies, and they're still beautiful as well, and they still get a lot of news, but they're more of the exception to the rule. So I do think there is some privilege to people that have like nice skinny bodies, which shouldn't be the case. It should be judged on their personalities, or if they're an actor, their acting, or if they're singers, their talents, or how they are as an actual person, not how they look. I think body positivity is a great thing. I mean, it can empower all genders and everyone to be more confident in their bodies and be more happy with themselves. Our society has looked down on people that hasn't reached their level of beauty or their standards, and it's about time that people finally started not caring what they think and loving themselves.
Years from now, I hope there are more curvy girls in modeling and all types of things.
As you might know, and probably don't know why, GameStop has been all over the news recently, and here's Ellie to explain the story.
If you've been wondering what's happening with GameStop this week, this segment is for you. Some key terms that you'll need to know in order to understand what's happening are hedge fund, short, and short squeeze. Short selling is actually very easy to understand. So one person thinks that the stock price is going to go up, so he owns shares of the stock. The second person thinks that the price is going to go down, so they don't own anything. The person that thinks the stock price is going to go down borrows the share from person one who owns the stock, and then they sell it at market rate. So let's say that that's $7 per share. They think that the value will go down, so they'll buy back the share when the cost is lower, which we'll say is $20 a share in this case. Then they'll return the stock back to the first person and keep the difference of $50 per share. But let's say that person two is wrong and that the stock price goes up. They still have to buy back the shares that they sold for higher than they had bought, but that means that the stock price has increased and they still have to buy it and give it back to person one. But this also drives up the value of a company. So a hedge fund is a huge company that is basically person two. They invest based off of the assumption that the value of the business is going to go down and that their shares will also go down. So this means that their entire business depends on other businesses failing. So hedge funds can gain or lose billions of dollars depending on how well a company does. Currently, GameStop, also known as GME, is the company. A subreddit called r/Wall Street Bets has been looking into the stocks of GameStop for years. They noticed that a major hedge fund, Melvin Capital, which was worth $12.5 billion until recently, was trying to sell shares to GameStop. Members of r/Wall Street Bets bought so many shares in GameStop that it caused a short squeeze, which is really bad for Melvin Capital because they had been person two who thought the price share was going to continue to decrease. But because of the people who had bought the shorts in GameStop, the price of the shorts went way up. This would cost Melvin Capital over $5 billion, and they closed their short on the 27th of this month. They're not losing any more money from GameStop at the time of this recording, but it's unlikely that they'll file for bankruptcy after multiple companies, including Citadel and Point72, have donated nearly $3 billion to help the hedge fund. Now, the subreddit plans to take on the stocks for another short squeeze, including AMC. So this hedge fund in the case would be D1 Capital, which is worth about $20 billion at the start of this year. So only time will tell what other hedge funds will fall prey to subreddits. Elizabeth Gauck reporting for Shark Tank News. Now back to our anchors.
That's all the time we have for you today. Good luck with the new semester, and here are some sitting Bernie memes created by Miss Bowen's photography class.